Our performance this year has been very good. We took two companies of equal size, one primarily a UK business, the other primarily a US and EU business, and we combined those to create a much larger player in the global market. The complexities around something like this can typically be somewhat risky, but if you look at this past year, we've executed beautifully on the combination of these two companies. So at this point, we've consolidated the technology so that it's all integrated together. We've consolidated operating locations. We've consolidated the human resources inside our company, all the while delivering 5 million pounds of synergies and savings, and still delivering 64 new label wins, customer wins, which by our standards was top of expectation. If you look at the company today, we have over 1,000 clients. We have 3 million users. We have over 2 million suppliers in our network. We have about 500 associates or employees in the business. We have operating locations in 8 countries. Our technology today is deployed across 100 countries. As a result of this and all of this effort, we've got about 45 million pounds in annual contracted revenue, which is up about 100% from 2017. On top of all that, the new deal value that we won last year was just north of 12 million pounds, which was also up 75% from the previous year. So here are the financial results. Revenues increased 106% to 52.2 million pounds. Adjusted EBITDA increased 119% to 17.3 million pounds. Our adjusted operating profits grew 205% to 13.1 million pounds. And adjusted net free cash flow was strong at a growth rate of 166% to 8.5 million pounds. And while we issued new shares to raise the money for the Perfect Commerce acquisition, we still managed to grow our adjusted earnings per share by 18% to 10.6 pence. In the last 12 months, we've perfected our go-to-market strategy in the UK. And this includes marketing, lead generation, solution selling. We've identified 6 verticals. We prioritize 4 products. Within those verticals, we hire sales experts that are dedicated to this. And then we have dedicated lead generation programs into each vertical. We're now going to take that very successful program and roll it out to the other 3 territories. The other territories being the US, which represents almost 50% of the potential market going forward. Mainland Europe, divided between, call it the mid part of Europe and the southern part of Europe. We have now 4 managing directors that run the 4 territories. We have a new managing director in the German and Dutch market who came to us as he was the previous CEO of the eSize acquisition. As well as our 6 vertical strategy. We're still selling our existing products, but we are going to begin to focus on new areas with new solution sets, primarily around our business network technology. So there's an opportunity for us, which is regulatory driven in the electronic invoicing space. We're relaunching our supply chain finance solution set, and we're launching new solutions around services procurement, which came to us via the acquisition of eSize. All 3 of these industries, supply chain finance, electronic invoicing, and services procurement, are all going through fundamental market shifts. On a go-forward basis, Proactis will be the only mid-market provider that has solutions across all of these areas. In summary, the UK market is maturing. The mid-market in the UK has one of the highest adoption rates globally. Our investments in supply chain finance, coupled with the acquisitions of Perfect Commerce and eSize, gives us a global footprint and a very robust end-to-end solution set. 50% of the growth in the future is going to come from the mid-market in the US as they begin to adopt solutions like ours. Regulations are going to drive electronic invoicing throughout Europe as countries focus on lost tax revenue. Supply chain financing will continue its hypergrowth as the industry sorts itself into the successful models of the future. In conclusion, 2018 was a year of building out the company to meet the global demands so we could be a leader in the global market. 2019 is about execution. It's about continuing the sales and support around our existing technologies while rolling out our new solutions in supply chain finance, electronic invoice, and services procurement. And always with a focus on profitability and shareholder returns.